Hey guys, thank y'all for tuning in today. Today's topic is going to be on how to use a financial calculator. A financial calculator is this thing right here. This is a very basic one that I got that, if you go to school for finance or accounting, they're going to beat this into your brain. Or if you take any finance class in college, they're going to beat this thing into your brain. And of course, there's more complicated ones with more features, but the average person is not going to use that. But there is a portion on this calculator that's very important, I feel like, for me, in terms of my own personal financial projections, is this little section right here. This little section is going to help you determine. I meet a lot of real estate investors and other investors and other business professionals that say, hey, I want to be a net worth millionaire in 5 years or in 10 years. Well, how much do you have to save? At what rate of return do you have to save it at? At what rate of return do you have to invest it at? For how long to have $1 million 5 years from now or 10 years from now? Keeping in mind that $1 million 10 years from now is not worth the same as $1 million today. So I can't give financial advice. I'm not a licensed financial advisor, so none of this is financial advice. This is just a tool, how to use a calculator, and you decide how this applies to you. So I'm going to use one online. Obviously, this would be pretty inefficient for the video, but I'm going to use one online, show you all a little something on how to do it. All right, so I'm going to try to make this as simple as possible. You see right here, this is our financial calculator. This is what I showed you on, in my calculator that I have, except this is online on calculator.net. So right here, you see this FV, that is future value. So think of future value as you saying, I want $1 million in 5 years or 10 years. That $1 million is your future value. It's a value in the future that you're trying to obtain. So right now we are solving for future value. Pretty much this equation just says, right here from the top, how many periods? Periods is the number of times you invested into this thing. So think of this as a fund. So how many times you invested into this fund, how your starting principal is how much money you're starting with. The interest rate is the rate of interest that you accrue, that you invested at. So right here is payment. This is how much you contribute into the fund. So how many times, okay, so this is how many times you contribute into the fund, how much money you're currently putting into it now, and the rate of return that you get, and then also how much you are contributing into the fund. And we're just going to say at the beginning of the period. So what this is from the top right here, let's just say that from a scenario standpoint, say that in 10 years, you want to have $1 million. So let's say that you're starting with $1,000 now. So let's say you have $1,000 in this fund now. In 10 years, you want to have $1 million. And after talking to your financial advisor, that you can achieve a rate of return on average between real estate and stocks and bonds, etc., whatever your financial advisor says you're investing in or whatever you personally want to invest in, that you can get 15%. Some people will tell you that's really high. But so let's just say 12%. So payment-wise, that every year for 10 years, you could, after analyzing your personal expenses, contribute $20,000 to this fund. And that this means that you're going to contribute $20,000 at the beginning of each year, every year for 10 years, and you're going to invest it at a 12% rate of return. Let's see how much this gets you. So we're going to calculate, and what do you know? We wind up with $396,197, or as you can see right here, $396,197. So that does not get you $1 million. So we practically have to triple this. So let's do $60,000 a year, 1.1. So probably a little bit less. We're looking at about $55,000. But if we get a higher rate of return, this number goes up. So backtracking, what this is practically saying, and let's do $50,000. What this is saying, that's close enough to $1 million right there. What this is saying is that if you invest $50,000 once a year, because the number of times you invested once a year for 10 years at a 12% rate of return, and you're starting with $1,000 in your bank account in this fund, and you contribute at the beginning of each year, you will wind up in 10 years with $985,835. That 985, if you discount it back at inflation, is not the same as having 985 today. I mean, I'd venture to say it's probably like having 700,000 in purchasing power. So that's kind of how it works. You can solve for payment. If you want to know, let's say we're going to solve for how much you have to contribute. So let's say that you want $1 million 10 years from now, and you're starting with $1,000 in your account, and you know that you can invest at 12% interest, and you're going to contribute at the beginning of each period. It's going to tell you that you will need to contribute $50,720.68 at the beginning of every year to reach the future value of $1 million. It's pretty much it, and it came out $999,000. So yeah, I mean, so you can do different things. You can find out the rate of return you would need. Say you know for a fact that all you can contribute is $10,000, and you know that over 10 years, you're starting with 1,000, you want $1 million. It'll tell you the interest rate. You would need a 39.889% interest rate or return on your money to get $1 million if you're only contributing $10,000 once a year for 10 years. So that's how you play with it. There's certain things you'll figure out, and like I said, I'm not a financial advisor, but you'll figure out that the two most important factors in this future value calculator is the rate of return and the amount of time that it's invested. So let's just say that you want to invest your money twice a year for 10 years. So let's do 20. And so that's 20 times. You're going to invest your money twice a year for 10 years. That's 20 times over the course of 10 years. You're starting with 1,000. When you use this, you have to change based off your interest rate, because what this is saying right now is that twice a year over 10 years, and you're getting 12% twice a year over 10 years. That's 24%. So you would have to half that at 6. And if you contributed $10,000 over the course of 20 years, over the course of 10 years, twice a year, you would wind up with $393,000. So that's where it gets a little confusing. Honestly, I would just keep it as simple as possible and say, keep this in. If you're an average Joe, you can learn more things about it. We don't have time for it, but we could keep this very simple and just say that, in 5 years, let's say in 5 years, I'm starting with 1,000 and I can invest at a 15% interest rate. And I know I can contribute $10,000, I'll have $79,000. But if you want to know how much you need to contribute in 5 years, so let's just say I want to have $1 million in 5 years, and I'm going to contribute once a year at a 15% interest rate at the beginning of every year. Just know you'd have to contribute $128,710. So that is how to use a financial calculator. It can get really complicated when thinking about it. This is some stuff that, can take, weeks to really figure out. Or you can figure it out right off the bat. It just depends on who you are and how your mind works. But this is something that I use, based off my, total net worth goals in the future. How do I track that back to now to know, one, how much I have to invest every year at what rate of return for how long to get the number that I want? And then how do I get this $10,000 a year or this $50,000 or $60,000 or however much it is every year? And that goes into your personal budget where you're trying to figure out income and expenses. So that stuff, you talk to your financial advisor about or, debate upon yourself. This is just a tool. Use it as you may. If you have any other questions, which I'm sure you will, feel free to comment below and ask me any questions you'd like. I look forward to hearing from y'all, and thank you so much for tuning into this video.